Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. Today's July 21st, 2019, and this is the uranium sector review part 2. So overall, the uranium sector right now on the tails of the Section 232 ruling from the U.S. administration has been weak. It's been hit, and even though overall I think the decision is actually net bullish for the uranium market, and I think it's going to turn out to be bullish for the uranium producers and explorers in the United States. But right now the market was hammered. I think there was a lot of short selling, a lot of stop losses were triggered, and frankly the technicals, as you'll see in the video ahead, are broken in almost all the various different names. And while on the shorter term time frames I see some signs of bottoming, which is good, on the other hand the weekly charts are weak, and so you kind of take it for what it's worth. Technical analysis is a snapshot of what's taking place and kind of where momentum has been, and as you'll see, momentum has been weak, and so the bulls need to hope that over the next coming 1 to 2 weeks that there's going to be a bottoming process and a resumption to the upside for the uranium sector. So starting with AL.V Uranium Corp, it's in a bullish descending triangle here. It's consolidating. You've got momentum moving in the opposite trajectory to the upside, so that's a positive divergence over the course of 2.5 years. Let's see what happens. It needs to break to the upside here for there to be a bullish case. If it breaks to the downside, then obviously the opposite is true. It's coiling right now between 50 and the bottom of this trend line, and if it breaks to the downside, that's going to lead to a fairly sharp move to lower. If it breaks above 50, the opposite is true as well. Anfield Energy, one of the American explorers, and it's just very weak right now. Technically speaking, it broke this trend line, and this is what happens. We couldn't break above the multiple moving averages of resistance right above it. It looked strong for a while, and then it got knocked down the last 2 weeks, the Section 232. Let's see if it can find support around that 15 cent level. If it doesn't, then it likely retests the bottom of this trend line from the upside, which in the long run is still relatively positive, but there's nothing positive right now about this chart. API Energy, on the other hand, is in a very, very bullish long-term cup and handle here. So long as it stays above this trend line and consolidates here, it'll be fine. It needs to break to the upside for there to be a bullish case beyond where we are today. URG Uranium, another US related play, and it was breaking out here, and then the 232 last 2 weeks, you see what happened here. It's been hit pretty hard. It needs to find support here around that 20 cent zone, consolidate here for a while, and perhaps break to the upside. Otherwise, we'll probably see a retest of that 17.5 zone. As you see, the momentum was broken to the upside, but it needs a couple weeks to be held there, and it was unable to do so, and it broke back below the 50 RSI. So it's got some work to do if it's going to maintain a bullish picture longer term. Azincourt Uranium, this one has been very weak. Could not break and hold this downtrend here, and now it's hovering around that 3 cent support zone. It was support before here, so it probably serves as support going forward. But until there's any fundamental reason to own this right now, there's no technical reason to own this at this point. Blue Sky Uranium. This one I like the long-term consolidation. Here's a rounded bottom. This technically is a descending bullish triangle, but it can be construed as a kind of a very long handle, if you will. Broke out above it, back tested it. Now we broke out above that back test, and now it's consolidating here, but it needs to break out above the 16 cent level, the moving averages here, or it's probably going to make excuse me, new lows around that 12.5 cent zone where it likely finds support. So here's Cameco. As you saw in part 1, Cameco makes up the majority of, or a very strong proportion of, the URA ETF, and it was not able to break above these moving averages. Had a very strong, very weak week last week with 8% down move, and so it needs to break above this downtrend. Frankly, it needs to hold this $10 zone So right now it's still weak, but it's consolidating here, and so long as it holds above the $10 level, I think it'll be fine. PPO was very close to breaking to the upside and then curled lower last week, so next week will be very see whether there's further downside momentum or there's continued consolidation here. Canalaska also was starting to act strong, and then kind of rolled over, and until it breaks above the moving averages at around 20 cents, 27, 28 cents Canadian, it's fairly weak. DPLO, one of the stronger looking charts right now. It kind of built a rounded bottom here, and it surged higher, created a shooting star right now. So it might back test a little bit, given the overall weakness in the uranium market, and then we'll see what happens. But if it breaks above 27, that's your sign that DPL is about ready to move towards that 39-cent double top area. Denison Mines. So this one was disappointing when I saw the chart. It was coiling here, and it broke above just barely, and then it got hammered down here. Effectively a shooting star, not quite, but bottom line is we closed at the lows of the week, and it needs to hold that 45-cent level. Bottom line, it's was a very nasty candle here, and there's not much more we could say about that. Encore Energy. So this one is one of those rounded bottoms, cup and handle right now, and it's at the bottom of the trend line. On the one hand, it's a great opportunity to add or initiate longs at this point. Should have very strong support around that 9 to 10 cent zone. But that being said, it needs to hold this area right now. So it's got a lot of support, both in momentum as well as price trend lines. But given the state of the market, we'll have to see what happens. Energy fuels, I like where we are right now. We had a very strong indecision week last week, and typically these candles mark the sign of tops or bottoms. And if it can have a follow through next week, that it closes the week above this trend line, I think it's going to make a run towards 250 rather soon. But in the meantime, it's pretty bearish until it breaks above this downtrend. On the other hand, if you just look at momentum trend line, it back tested, and so far it's held this back test area. So long as it doesn't break below that 31 level of Fibonacci to the downside, I think it'll be fine. I think, as I pointed out before, section 232 was, I think, net positive for uranium and the uranium producers and explorers, and I think this one will benefit from the working group that the Trump administration is putting together. Fission 3.0, this one is probably, no, I would say this is the best chart right now in the entire uranium space right now, and it's just beautiful, breaking out of this bullish wedge rather, consolidating, back testing, and now curling higher. And even though it was pushed back, and almost at the very end on Friday, it closed the weeks effectively at its highs. If it breaks above the 26 week moving average of 11 cents, I think this can really make a run. It's got a couple of exploration programs going on right now. It breaks, any positive news breaks, and this can make a run towards that 25 to 45 cent zone. So I like what momentum is doing here. If I had more dry powder, this is the name I would be strongly considering, but alas, I own a lot of it, and given the relative illiquidity of this position, I'm not comfortable adding too much more to this position. Fission Uranium, this was a nasty breakdown, 9% down this week. I was not impressed, to say the least. Obviously, we know the fundamental picture here is very strong, but from a technical perspective, there's nothing to write home about right now. Forces Metals, this is another rounded bottom, cup and handle. So long as it's holding above that 14 cent zone, it'll be fine. It's got a lot of upside here before it hits the upside boundary around the 25 cent zone, but it needs to hold these areas, and it needs to hold them soon. Forum Energy Metals, this one is also one of the better charts in the sector. Clearly bullish consolidation, breakout above the bullish flag. Now it's consolidating here. I think this is setting up for a move towards that 17 to 20 cent zone. So there's a lot of upside. I don't know how long it's going to consolidate for, but I definitely like the look and setup of this chart. Global Atomic, they came out with some incredible, more incredible news. This company is doing things really well, and from a fundamental and technical perspective, this is one of the better plays, if not the best play in the sector right now, based on everything that I've read and the analysis that I've done. And just the technical setup, the moving averages are showing support. There's fundamentally positive news coming out of this company, and management seems to be doing everything right. It's kind of finding resistance around that 69 level, and so I'm not surprised with this consolidation, but a break above 60, and that's my trigger to enter this position long from a technical perspective. Gov Uranium, this one I thought this was ready to break out, and then we got hammered lower, and so we'll have to see what happens with GovX. I mean, it's got a great fundamental story behind it as well, but it needs to break back above that 17 cent level for bullish consolidation, bullish breakout rather. But the cup and handle breakout is clear, and so now it needs to maintain this level of support and break to the upside. I think we'll see it, but it broke below the 50 RSI level, so that's strike against it. It needs to recapture that area and do so soon. Greenland Minerals and Energy. This is another one of those beautiful charts. Rounded bottom, cup and handle breakout, and bullish flag breakout. But this week it got hit, so it might pull back towards the 8-cent zone if the technicals start deteriorating further. ISO Energy, another one that's got a very interesting fundamental story behind it. It's going to find some resistance, as I pointed out, around that 61 Fibonacci. That also coincides with the area of previous breakdown, which is why we're stalling right now. But so long as it's above these moving averages, above the 53 cent area, it'll be fine. And I think the upside is very strong once the uranium sector, if the uranium sector ever turns around, and I certainly think it will, but it needs to prove itself. Once that happens, I think this name is going to skyrocket to the upside. Laramide Resources. So this one broke down considerably, and it needs to hold that 24 cent area, and needs to do so very soon. This is probably the weakest chart of the entire sector right now, and frankly, I'm disappointed with this, but this is a technical breakdown. This is what happens when you break below various trend lines, and you're going to have stop losses being triggered, and here we are. So there's a very strong fundamental story behind this name, and I think it'll be fine. But in the short run, this looks like it's going to have to prove itself from a technical perspective. Nextgen Energy. This one was one of the strongest names the week before on the tails of the Section 232 decision, and even though it pulled back some here, it didn't pull back like most of the names in the sector. So this is one of the strongest looking charts with one of the strongest fundamentals in the entire sector. And so I really like this name. Now you've got the support of the 13-week moving average right below it. And so long as it holds that 160 level, I think Nextgen will be fine and setting up to make a run towards that $2 area. Paladin Energy, this one had broken out very firmly above the downtrend, and it's found resistance at the 50 RSI level. So it's kind of backtesting right now, but I really like this move here, and I think a move towards 20 cents is definitely in the cards. And this is a company that can go much stronger if uranium price does rebound. All right, so Plateau Energy had a pullback this week of close to 9%. We'll see what happens. I mean, right now there's some nice support at the moving average confluence of moving averages around 64 cents. But it needs to hold these areas, and like I said, there's just a lot of reason why a lot of these companies, a lot of these stocks need to really pick up their game, if you will, if they want to hold their gains over the last couple of months. Purepoint Uranium Group,
This one, I like the setup here. It's very similar to Fission 3.0. It's got some great management. It's got some great exploration programs going on right now, and all it takes is one trigger to move. But that being said, it was down 12.5% last week, and it's struggling to break above this trend line. So we'll have to watch this one very closely. Sky Harbor Resources, like Fission, like Nextgen, it's got a great resource base. It's got a very good management, but it's struggling right now. So it's not sexy. And until uranium price moves to the upside, it's going to be in this downward consolidation. So we'll just kind of leave it at that. Texas Mineral Resources, this is one of the best looking plays in the entire space. This is not really pure uranium play. It's really a rare earth play, and that's why it's breaking out along with the rare earth sector. But this is a very positive development. If it can consolidate here for a couple of weeks above this trend line, this will suggest that the move to the upside is real, and it likely not only retests 58 or 57, but moves much higher thereafter. UEX Corp, I like the candle here last week. It closed strong to end the week, and it seems like it's coiling to break above that 18-cent zone, and once it does, there's some significant substantial upside, and I really like the way it's consolidating right below the 50 area. So this is one of the stronger names, and notice the accumulation this year. It's not kind of going like this. It's not going lower. It's just consistently going higher and higher and higher, and at some point it's going to explode higher. Here's URG Energy, URG, and yeah, I mean this chart broke down pretty considerably, and it needs to continue holding this area, holding that 50-cent zone, holding 60 cents frankly right now, and just regather strength and break back above it. I think eventually this breaks above $1, and eventually in a uranium bull market, this will be well above $10 a share. But in the meantime, there's nothing technically attractive about this name from a longer term perspective. In the short run, I think this is going to make a run towards 80 cents before finding any significant resistance. So we'll see what happens. Uranium Energy, UEC, another one that was hit. Unlike Energy Fuels, unlike Your Energy, those names were positive this week. This name closed slightly negative, although 1%. It's not really much to write home about. But it needs to hold that $1 level, and for there not to be further technical weakness. But I think along with the uranium sector, I think we'll see some bounce in its step very soon. Virginia Energy Resources, and this is one of those names that it's got a great resource in Virginia, but it's got a lot of political risk, and if it can break through that risk, I think the working group is something that might benefit this name more so than most others. Energy Fuels, Laramide, and Anfield are three other names that will benefit from that news from an exploration perspective. This one, this is just a great time to accumulate. I think the risk to the downside is relatively limited at 8 cents, and I think the upside is perhaps better here than any name in the sector. But again, it's all contingent upon not the price of uranium, but the political decisions that are tied to its property. And finally, Western Uranium Corp. It's still in a rounded bottom here, consolidation. It needs to prove itself. It needs to break back above that $1 range, and at some point I firmly believe that it will, but in the meantime it's kind of consolidating here. Once it breaks the upside is really nice at 325 and effectively much more gains beyond that. I mean, this is a uranium play, this is a vanadium play, so it's a diversified entry into the resource market. So definitely look at this name from a fundamental perspective. This area at 40 has served as strong support, and so let's see what happens in the coming weeks if that continues to be the case. Overall, guys, uranium, as I pointed out, is weak, but there's hope for a better future. Let's see what happens, and I'll keep you updated throughout the week and weeks to come on what's taking place. Stay strong, and best of luck to you.